In today's video, I want to teach you a very profitable trading strategy that is suitable for 1 hour time frame. In this trading strategy, we have two indicators. The first one that we want to add is absolute strength histogram. We add this one, absolute strength histogram version 2, which is written by someone named Jie Honglim, if I'm pronouncing the name correctly. Alright, this is the indicator, and as you can see, it's added here below the chart. This indicator is a very powerful indicator that gives us a measure of the absolute strength of movement in the market. We need to change the settings of this indicator. So here we go to the settings of this indicator, and here for period of evaluation we set it at 14, and for period of smoothing we set it at 5. In this trading strategy we don't need the histogram, so we remove it from here. Alright, we're done with the settings of this indicator, and now we want to add the second indicator. So again, here we click on indicators and we search MACD, this one, moving average convergence divergence, and we need to change the settings of the MACD. So here we go to its settings, and for the fast length we set it at 100, for the slow length we set it at 200, and for signal smoothing we set it at 50. And then here in the style tab, we remove MACD line and signal line because we only need the histogram. Everything is already set on the chart. And before we start the strategy, please give this video a like. And if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, trading based on this strategy is very easy, and you just need to be focused on your trade entry, stop loss and profit. When MACD histogram is red, we only look for short position opportunities. This MACD with the special settings that we made, it shows us the overall trend of the market. In this trading strategy, we try to enter in the current direction of the market, not against the trend. So when MACD histogram is red, we want to open only short positions. And by the help of this indicator, we can find good trading opportunities for short selling. This is how we do it. When red line crosses above the green line, it's a signal that bearish strength is becoming greater than the bullish strength. And this is a bearish signal. So we can enter a short position here at this point when this new candle is opened. The stop loss above the previous swing high and the profit at 1.5 risk to reward ratio, but this is the minimum amount of profit for this trading strategy. And if you're an experienced trader and you can manage to stay longer in your position, you can get the most out of your positions. After this trade here, as you can see, again the red line crossed above the green line, so another short position could be opened here at this point with the stop loss above the previous swing high, and this trade is also a profitable trade. As you can see, another short position signal we have here where the red line crossed above the green line. So in practice, we could enter a short position at this point with the stop loss above the previous swing high, and this trade is also a profitable trade. As you can see here, we have a crossing, but this crossing is not accepted because the red line was running on the green line and then it moved up, and we don't take these kinds of signals. We want it to be below the line and then crossing above the line, like this case that we had here. Alright, moving on the charts, here again we had another short position signal where the red line crossed above the green line. So another short position can be open here when this new candle is opened, and this trade is also a profitable trade, as you can see. And after this trade here, we have another short position signal while the MACD histogram is still red, but this is a false signal. Actually, the movement of the price after the signal is very short and not enough to make our position profitable. Encountering these kinds of signals when a reversal is happening in the market is normal in trend following strategies, and we need to manage the risk properly by setting stop loss and correct position sizing. Later in the video, I'll talk more about this. Anyway, this signal could be easily avoided because when you look at the MACD histogram here for this signal, you can clearly see that it became very small, and this shows that downside momentum is extremely weakened and it's very probable to have a reversal. And you can see that the histogram turned to green from here. When MACD histogram is green, we only look for long position opportunities. In this situation, when the green line crosses above the red line, it's a buy signal, so we could enter a long position here at this point when this new candle was opened with the stop loss below the previous swing low, and this trade is also a very profitable trade, as you can see. Moving on the charts, here we have another long position signal where the green line crossed above the red line, so we can enter a long position here at this point when this new candle is opened. The stop loss below the previous swing low, and this trade is also a profitable trade, as you can see, where the price advanced up to this point. Here this is not an accepted crossing because you can see that the green line is just running on the red line. It couldn't successfully cross above that, and here for this long position signal here, this is also a rejected signal because MACD histogram is red, so we don't take any long position here at this point. Moving on the charts, here we have a long position signal, so another long position could be opened here, another one we have here, and another long position signal here, and all of these signals are profitable and we continue like this. Please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not have false signals, as we had a false signal earlier. This is a trend following strategy, which means it works well when the market is trending, and when a reversal is happening in the market or in times that the market is not trending, it doesn't work well and you may encounter false signals. So you need to manage your risk so you can limit your losing trades and protect your trading account. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategy that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in the next video, and good luck with your trading.